Hello, good morning. This is Mr. Chisi with Business Studies. So this is the question that I presented to you in class on Thursday. So I'll just demonstrate on how we are going to prepare the trading and profit and loss account. Then later on I'll also demonstrate how we're going to prepare the balance sheet. So what's going to happen in your final examination is this. You won't be required to draw any diagram. All the diagrams will be drawn for you, like the way this one has been drawn for you. All you have to do is just to write the title on top and start filling in the details. So when preparing the trading and profit and loss account, what starts first is sales. So we start by entering the sales. We check on the list. I hope you've got the question paper in your hands as well, because I have mine. So you start by checking the sales. So the figure for the sales will either come in the middle or at the end, at the last column. So the figure comes in the middle column if we have sales returns on the list. So we check on our list, do we have sales returns or returns inwards? So if it's there, the figure will come in the middle column. Will come in the middle column. Why? Because we have to subtract the sales returns. So we're going to say less sales returns. So our sales returns, it's an error there. Our sales returns will come below the sales figure. So to show that we're subtracting, we'll put this figure in the brackets. In the brackets like that. So when we subtract this figure from the sales, we are going to get the net sales. We're going to have our net sales below the subtraction. So these are our net sales. So now these goods were sold, yes, quite right. Now we have to find the cost of these goods that were sold, and that's the main purpose of preparing this document. So for us to find the cost of this document, we introduce less cost of goods sold. You even underline it. You can even underline it. Sorry. Like that. Okay, so under less cost of goods sold, you're going to introduce opening stock. So the figure will come at the or in the middle column like that. Why does it come in the middle column? Because we have to subtract some purchases. We have to add some purchases as well as subtract some purchases returns if you have them on the list like that. So under opening stock, we're going to have purchases. We're going to say add purchases. Add purchases. So the figure will come in the first column. Will come in the first column. That's if we have purchases. We have purchases returns. So in this case, on our question paper, we don't have purchases returns. So the figure will come. Will go in the middle column. Will go in the middle column. Carriage in. We add carriage inwards to the purchases. Carriage inwards. The figure will come under purchases there. So we're going to add everything in this list. We're going to add everything here so that we come up with goods available to be sold. So when we add everything, we're going to come up with we're going to come up with goods available to be sold. So we'll add opening stock plus purchases plus carriage inwards equals goods available to be sold. That's goods available to be sold. That's the figure for goods to be sold there. So the goods available to be sold, that's the figure showing there. So under the goods available to be sold, now we're going to subtract closing stock. We're going to say less closing stock. Closing stock. So normally closing stock is the amount of goods that have remained after an accounting period. So for example, you started your business in January, the closing stock will be in December. That's when you will find out how much goods have remained after selling. So the closing stock will be subtracted, and for us to show that we're subtracting, we'll put the figure. We're going to put the figure in brackets. Put the figure in brackets. So when subtract this figure from the goods available to be sold, we're going to come up with the costs of the costs of goods sold. We're going to come up with the costs of goods sold. And remember, that's what we were calculating. Remember on top here, that's what we're calculating. We are lessing it, we're subtracting it. So we subtract this figure from the net sales, so that we find the gross, so that we find the gross profit. Okay, so when you subtract this figure from the net sales, we're going to find the gross profit. Gross profit, like that. So the gross profit is found by subtracting the cost of goods sold from the net sales. So the cost of goods sold minus, or we say net sales minus the cost of goods sold is equals to gross profit. Now, this is not the end. We're going to go now to the profit and loss account. Below gross profit, we're going to introduce add incomes. Add incomes or add gains, they're all the same. We can just underline it. Can underline it like that. And incomes. So we check on the list. Incomes are monies that are coming into the business. Incomes are monies that are coming into the business. So in this list, we're going to check, what are we receiving here? What is the business receiving? Are we receiving any rent? Are we receiving any commission? Are we receiving any discount? Oh yes, we are receiving a discount there. We've got a figure there. So we've got an income there, which is discount received, which is discount received. Discount received, like that. The figure will come in the middle column. In the mid column. Do we have any other income here? Do we have any other income? We don't have any other income. So the same figure for discount received will come to the last column. This same figure will come this side. It will be called total income. Total income. So we're going to add this figure to the gross profit so that we come up with the total gross profit. So let's quickly add the figure. Let's quickly add the figure. So income plus gross profit, we're going to come up with the total gross profit. This one is known as total gross profit. like that. Now we've added the incomes. Let us now subtract the expenses. So we check on our list, do we have any expenses? Oh yes, we have some expenses. Hope you've got the question paper in your hands. So we're going to say less expenses. You can just underline it as well. You can just underline it like that. Okay, so the first expense that we have on the list is sundry expenses. Okay, so the figures for the expenses also come to the middle column. The second expense that we have there is selling expense. Selling expenses. Also, the figure for the selling expenses will come to the middle column. Any other expense on the list? Any other expense? Carriage outwards. Carriage outwards is an expense. Remember, we said that when a customer buys an item from your shop, then you use your transport to deliver that items. You even pay the driver, you buy fuel, you spend money to deliver that item. So the money that you use to deliver that item is known as carriage outwards. So it is an expense. Carriage outwards. So the figure will come to the middle column. Do we have any other expense? Let's check. We've got, oh yes, we've got rates and insurance. Rates and insurance. Okay, you're paying insurance for your vehicles. You have been paying rates for the land that you occupy. All those are expenses. Do we have another expense on the list? Do you have another expense? We don't have another expense. So we're going to add all the expenses together to come up with the total expenses. So the figure that we get is known as total expenses. So we add all the expenses together to come up with the total expense. Like that. Okay, so now remember here we are subtracting. Remember, we're subtracting, we're saying less expenses. So we are going to put this figure in brackets to show that we're subtracting it from the total gross profit. So if we subtract the total expenses from the total gross profit, we're going to find the net profit. So remember here we're subtracting, we'll put a minus. So when we subtract this figure from the total gross profit, we're going to get the net profit. We're going to get the net profit. Like that. So the figure will come below there. It's the same figure that you're going to use in the balance sheet to calculate owner's equity. Okay, so this is how you calculate the trading and profit and loss account. Let us now go to the balance sheet.